It is 8:05 a.m. Pacific Daylight Time. It's the 22nd day of July 2026. This is episode 1357 of Bitcoin, and Satsuma is no more. That's going to be our lead story for the day here on the Bitcoin and podcast with me, your host, David Bennett, bringing you all the news that you can use about Bitcoin and macro from around the world. I curate a whole bunch of stories for you that I will read so that you don't have to on your way to work or to lunch or back from lunch, depending on where you are in the world's time zones. And I do that so that you can make your estimations for yourself instead of just relying on what I think about the stories, although I will tell you what I think about any particular piece of news. It's just basically me curating for you the signal and leaving all the noise behind. So Satsuma is a Bitcoin Treasury company. It's going to be our lead story. The Clarity Act. Some people say it's going to pass. Other people say it's not. Apparently some Democrats have some problems with what Trump is saying about what parts of the ethics provisions that he will and will not accept. Yesterday, it looked better than it does today. We'll just say that. Jack Dorsey has unveiled a new group chat app built on nostr. We'll tell you about it. And the Bank of International Settlements, otherwise known as the BIS, is honking their horn about the dangers of stablecoin. So the fear in legacy financial structures has not abated, not one bit. A billion Telegram users going to get a crypto wallet, according to Pavel Durov. The Department of Justice is seeking a civil forfeiture of $25 million in crypto. And then we'll talk about the OpenAI hack of Hugging Face. They didn't mean to do it, or at least that's what they say. I may have a different take on it after we finish that story. And then Franklin Templeton, staying with the whole AI thing, says that agentic AI is the next killer use case for blockchain. Okay, well, fine, whatever. This is fine. You'll be fine. We'll all be fine. Let's go to Satsuma, who is not going to be fine. Satsuma shareholders approve Bitcoin liquidation and London delisting. This is out of Bitcoin Magazine. Micah Zimmerman is writing. Satsuma shareholders have voted to unwind the company's entire Bitcoin treasury and pull its shares off of the London Stock Exchange at a general meeting on July 20th. Shareholders passed two special resolutions. One, to return substantially all of Satsuma's capital back to the shareholders, and the other is to cancel the company's listing on the FCA's official list. The capital return resolution carried 90% support with 7.8 billion votes in favor against 813 million votes opposed. The delisting resolution passed with near identical margins, another 90% in favor of. The board will now close out Satsuma's trading operations and sell the company's remaining Bitcoin, which is only 668 Bitcoin. It's pretty much nothing, man. It's like this is one of the smallest Bitcoin treasury companies that there was. The stock had traded as Satsuma Technology PLC, one of the UK's Bitcoin treasury vehicles, second in size only to the Smarter Web company. A timetable set out as June the 24th, shareholder circular governs the wind down. The record time for entitlement to B shares falls at 6 p.m. on August the 3rd. The deadline for warrant holders to exercise their warrants if they want the resulting ordinary shares included in the capital return. Once the total number of qualifying shares is fixed, Satsuma will petition the UK High Court to confirm the return of capital. A directions hearing is set for August the 13th, with a confirmation hearing to follow September the 8th. Under that schedule, the listing cancellation lands on September the 14th, and payments and crest transfers goes out by September the 28th. The vote caps a run of trouble for a company that built its identity around holding Bitcoin on a public balance sheet. Satsuma bought most of its coins at an average price of above $113,000. With Bitcoin trading below $68,000 in July, the Treasury sat on steep, unrealized losses, and Satsuma's shares fell more than 99% from their June 2025 peak, which was near 14 pounds sterling to around 21 pence, a valuation below the worth of its own Bitcoin holdings. The company had already begun trimming its position under liquidity pressures. In December of 2025, the company sold 579 of its 1,200 Bitcoin for roughly 40 million pounds. Proceeds it used to retire 78 million pounds in convertible loan notes that matured December the 31st. That sale left the company with 620 Bitcoin and about 90 million pounds in cash. By April, Pantera Capital, which held a 6 to 7% stake, was publicly pushing Satsuma's board to sell all of its remaining Bitcoin and hand the cash back to shareholders rather than persist as a listed treasury company. Well, that pressure, combined with the shareholder requisition from holders representing more than 20% of Satsuma's issued capital, forced Wednesday's vote. The board itself was split on the outcome. 4 of the 6 directors recommended shareholders reject the wind down, arguing it would dismantle a listed Bitcoin vehicle and close off the company's existing strategy. 2 directors backed the proposal, citing shareholder demand and the execution risk of continuing as a going concern. Satsuma's exit adds to a wave of distress among the smaller Bitcoin treasury companies, as coin prices sit well below the levels at which many of them accumulated their holdings, leaving boards to choose between raising fresh capital or returning what remains to shareholders. Yeah, good luck raising any fresh capital as a smaller Bitcoin treasury company with no positive cash flow. I've been arguing this forever. Well, David, you're not a billionaire. You have no idea what you're talking about. Yeah, well, screw you. I do know what I'm talking about. A company cannot be a company if they're literally just sitting on cash and using that cash or cash equivalents, whether it's Bitcoin, whatever it is, to produce derivative structures to raise more capital. That's not real income. Sure, it's listed as income when it comes to tax time, but it's not real income because it's not real cash flow. Not really. You have to have a product. You have to have a service. You have to have something that you can sell to people that they find valuable. It's not that hard. Okay, well, finding something to actually sell to people that they find valuable, that actually is kind of difficult. It's just that it's not hard to figure out that that's what you have to do. That's easy. I want to build a company for myself. Okay, how do you want to make money? I want to sit on cash. No, that's just not the way this works. You won't be fine trying to do that. Also, this Satsuma company, if you did not know, is the outfit from a gentleman named Mark Moss, who's quite famous over on X, and it looks like he's getting his ass handed to him. And I've been saying this for a while. Most of these small Bitcoin treasury companies are not going to make it for 2 reasons. One, they're too small to get any kind of traction in generating the kinds of derivative financial structures and instrumentation like Strategy has. They're not going. They don't have the marketing teams to be able to do that. They can't really compete against the shit show that is going on over there at MicroStrategy or Strategy or whatever you want to call it. And, second, they all came in later. And that's the real problem here. They all came in too late. The price that they were purchasing Bitcoin at was too high considering where we are today. And the run up on the price had a lot to do with the first 4 major Bitcoin treasury companies buying a shit ton of Bitcoin. And the price ran up, and then all of a sudden everybody's like, me too. Well, not anymore. Satsuma is going to, you're going to see this a lot now. A lot of boards of a lot of these small Bitcoin treasury companies are probably going to do the same thing. They're going to demand or not the boards, but the shareholders are going to force a vote. They're going to demand the capital be returned. The only way that we can do that is basically force selling all the assets. And since these are all Bitcoin treasury companies, they're going to be selling Bitcoin. And it's going to put downward price pressure on Bitcoin, not so much as the amount of Bitcoin being sold on the open market or even at auction in private, or, like sort of like a behind the counter sort of deal where you're not really flashing, the sale of all this Bitcoin. That's not really what's going to put the price pressure on it. It's going to be the sentiment that is signaled through the media of, oh, another Bitcoin treasury company is about to fail. Like it could be Metaplanet. I don't know if it's going to be Metaplanet. That's not what I'm saying. I'm just saying that some of these smaller guys, Metaplanet isn't really, it's on the top side of the medium size, but there's a whole bunch of very, very small Bitcoin treasury companies. And they're going to fail one by one. A lot of them are going to do exactly this. They're going to fail internally by shareholders forcing a vote saying we want our money back. And they're going to do it because they're just, people just don't have patience. They're modern humans are not built for patience anymore. So there you go. Now to the Crypto Clarity Act. Still at mercy of ethics section as Democrats balk at Trump deal. Jesse Hamilton, writing for CoinDesk, U.S. Senate Democrats are said to be unhappy with some of the details emerging about the crypto market structure bill's most contentious section, the language that will ban government officials from significant crypto ties. The deepest current point of disagreement is who will enforce the ban, according to people familiar with the matter. The industry insiders were told that the Democrats have held a tight preference that state attorneys general be able to enforce the ethics restriction on federal officials, while the White House and Republicans behind the bill are insisting on the U.S. Attorney General as the top authority. The Digital Asset Market Clarity Act's advancement has come to depend on a compromise on this ethics restriction for government officials, which sources say would include the president, the vice president, and all the members of Congress. If they can work out a compromise on that point, the rest of the bill is expected to move forward despite a few loose ends in other areas, such as the treatment of developers in the bill's illicit finance safeguards. August 7th is seen as a major deadline for finishing the Clarity Act this year. Crypto insiders are expecting the bill to get to the floor as soon as the beginning of next week, which would fit with what Senate Majority Leader John Thune had previously indicated. The legislation could require several days to get to a final vote. Earlier on Tuesday, CoinDesk reported that a White House official said Trump agreed to the most comprehensive and wide-ranging ethics provision in history, though the actual language he's accepted hadn't been shared with Democrats. As of press time, it was still unclear if Democrats had seen the exact language. Still, the administration argued that it had bent over backwards to satisfy Democrats, suggesting that it would be their fault if the legislation doesn't advance. Trump's agreement to a crypto constraint of his own business ties raises significant questions about how his involvement would have made sufficiently remote to comply with the limit. The president and his family are deeply connected to several crypto business initiatives, including their ownership stake in World Liberty Financial. While Trump has insisted he's not conflicted, as his administration imposes crypto policies that affect his own business, Democratic lawmakers have openly accused him of corruption. The disagreement over the Clarity Act's ethics enforcement boils down to which legal authority the side believes will properly enforce the restrictions. State attorneys general are beholden to their states and local constituents, and many of them have conducted legal battles with Trump's administration. But a federal enforcement role would traditionally be in the hands of the Department of Justice, which Senate Democrats suggest is too closely influenced by the president, whose former personal lawyer, Todd Blanche, is his current nominee to be attorneys general. If the Senate negotiators from both parties manage to find common ground in these final days, a Senate passage still isn't quite enough. The bill would then need approval from the U.S. House of Representatives, probably when it returns to session in September. But the House has recently struggled with internal strife within the Republican majority that has tripped up progress on other matters. Also, chatter among Democrats has raised the potential of inserting prediction market policy into the Clarity Act, a controversial new topic that would likely derail the effort. So I'm not really looking at the Clarity Act as being passed this year. It's a bad bill. The developer protections are essentially non-existent in this bill. Now, if this bill were to pass, yes, you would see a spike in Bitcoin and the broader crypto space. But I don't, that doesn't matter if developers can be thrown in prison for simply writing code, which is a complete and total, utter violation of the First Amendment of the Constitution of the United States of America. Be that as it may. There's something up here. If my highlight held, and I don't think it did, it didn't. Okay, well, there was something that I wanted to get back to, but it doesn't really matter. It is most likely the case that whatever language has been inserted in the bill that reflects Trump's acquiescence to the ethics provision is probably not going to be good enough for the Democrats. One other thing that I will say about this is that amazingly enough, I find myself actually siding with the Democrats on the state's attorneys general being the people that actually do this. And it's simply a matter of, for me, and I don't think I don't think this is the Democrats' intent. I think they just want 50 different people making 50 different rules to confuse and stymie and, basically bog down the Trump administration. I agree with it for the following reason. The 10th Amendment. It should be up to the states to be able to make decisions for their own citizenry, how things are going to happen in their own state. That's the only reason I agree with it. Amazingly enough, I find that the Democrats are actually on the side of the Constitution this time, although I can almost guarantee you it's not because that's what they, it's not because that's what they want. I think they're doing it just to be, honestly, to be more troublemaking for Trump than anything else, because they hate him. They can't stand Orange Man, but it is what it is. On to cooler stuff. Jack Dorsey has unveiled a new open source group chat app. Matthew DeSalvo from Bitcoin Magazine writing this one. Jack Dorsey has announced a new group chat platform aimed at reducing teams' reliance on platforms like Slack. In the Bitcoin Maxi's latest push for decentralization, the Block co-founder wrote Tuesday on X that the new app, which is named Buzz, was, quote, for teams of people and agents of all sizes, and it was model agnostic, decentralized, self-sovereign, and open source. Described as a new native workspace for human and agent teams on its website, Buzz users can chat with teammates and specialized AI agents in one shared space, then move straight into planning, project management, coding, and pull requests. A statement from parent company Block said that the new app was built on decentralized social networking nostr protocol. Quote, the interface will feel familiar to anyone who's used a modern team communications tool, Block added. Quote, every company is going to need a place where humans and agents work together, Bradley Axon, head of AI capabilities at Block, said. Quote, the question is whether that place is proprietary or open. We built Buzz because we believe it should be open, end quote. Dorsey, whose firm Block owns companies Square and Cash App, has long been pushing for decentralized solutions, primarily with Bitcoin. The billionaire founder of Twitter left the social media company to focus his efforts on payments and Bitcoin adoption in 2021, saying he wants the cryptocurrency to be the global currency and everyday money. He has also described Satoshi Nakamoto's Bitcoin white paper as poetry. Cash App allows users to send and receive and buy and sell Bitcoin, and point of sale terminal Square accepts the orange coin via the Lightning Network. And Block also last year debuted a Bitcoin mining rig with swappable parts. Yeah. We know. So if you've ever used Slack as a team communications tool, then one of two things has actually happened to you. One, it's fine, it's useful, and you can talk with your team members about it. Two, it's caused massive anxiety because every time you open Slack, you're like, what fresh hell am I about to wade into? It is the case that they're comparing it to Slack as a team working tool. This, however, I don't think that this is really the correct way to look at it. For me, and maybe I'm just not seeing the whole forest for the trees here. When I see the graphic user interface, it doesn't really look like Slack, and it's not just communications like, hey, make sure that you come to the team meeting at 7 p.m. Eastern time, or hey, we've got here's the document, please mark it up. This seems to be more about coding. And even though Slack is used in coding environments, this just feels different. It seems way more simplified, but with the ability for whole teams to interact with either single or groups of AI agents. And it's going to be interesting to see how it works. I'm not poo-pooing the idea. I think it's great. Plus, from also what I've read is that this also seems to be sort of like a GitHub type repository, and it's all built on nostr. Let me reiterate that. It's all built on the nostr protocol. If you've heard me talk about nostr before, and generally speaking, I talk about nostr in the form of things like Primal Client, Ditto Client, Jumble Client, which are all essential. Oh, and Damus, the client for iOS, which I think they also have a desktop version now, but whatever. It's more about social media. And I think we kind of worked ourselves into a pigeonhole on this whole social media thing, because nostr can do a whole lot of other stuff. But the first best out of the gate, out of the box application for nostr seemed to go right to replacement of modern social media apps, because people kept getting delisted or getting their accounts suspended or just flat ass banned. But social media as something that can be done with the nostr protocol is probably 1% of the capabilities of a protocol, because it's not you got to remember, nostr is a whole protocol. Like, how many things can you do with email? Well, yeah, I know a lot of people say you can't do a lot with email, but that's actually false. There's a lot of stuff you can do with the email protocol. There's a lot of stuff that you can do with the internet protocol, as everybody knows. Nostr protocol is just another kind of protocol. It's just really simple, but it's more about how the identity of the people using that protocol is generated, kept, that kind of thing. It's really about how we insert ourselves as an identity into this protocol, this messaging protocol that we know and love as Nostr. And Jack has done probably more out-of-the-box thinking of what to do with the protocol than a lot of other people in the Nostr community. So hats off to Jack. I have not used it because I have no reason to use it. If you are a user, please use it and let me know. By the way, you can get to it by going to the story, and you can get to the story from Bitcoin Magazine by looking in the show notes for the URL, and you can get directly to it. If you need a memorial, a digital memorial, go to everstonebtc.com. That's everstonebtc, all one word, .com. Memorials on the Bitcoin blockchain. And so let's see how it works. First, you make a simple one-time payment starting at $79 and guarantees your memorial is processed. You don't subscribe to this, and there's no servers that you have to maintain. It's just a permanent commitment, a one-time $79 fee. Over at Everstone BTC, they generate a digital fingerprint or hash of whatever media that you've decided to insert into this memorial. This is embedded in the Bitcoin blockchain using OpReturn. We use less than 80 bytes to remain good stewards of the time chain, respecting the block space and node runners worldwide. We provide a downloadable data bundle and an open source viewer. Even if this website disappears, the everstonebtc.com website, you can self-host the viewer or verify your memorial's existence using any Bitcoin Explorer. That's true sovereignty. So if you've had a child that was born and you want to memorialize that child's birth on Bitcoin blockchain, go to Everstone BTC. If you've had a loved one who has passed away, you can memorialize their life at Everstone BTC for $79. If you've had a pet that you need a memorial for, you can do it at Everstone BTC. If you just want to memorialize anything at all, like maybe you got a promotion at work, or maybe your significant other got a promotion at work, you can memorialize that. You can memorialize anything, and once it's embedded into Bitcoin, it's there forever. It's a different way of looking at how we do memorials. Okay, the BIS. The BIS warns USD stablecoins can evade capital controls, challenging traditional market regulations. Timmy Shin is writing this one for the block. The Bank for International Settlements said that dollar-backed stablecoins could bypass capital controls, raising concerns regarding foreign exchange restrictions in emerging markets. In a study published on Tuesday, the BIS analyzed stablecoin flows across more than 130 economies and found that stablecoins appear largely unaffected by either broad or specific capital flow restrictions, as they partly circulate outside of the regulatory perimeter. Notably, the researchers suggested that foreign exchange restrictions and capital controls, traditional tools government use to limit money flowing in or out of their countries, are less effective against stablecoins than against conventional foreign currency bank deposits. According to the report, the growing adoption of stablecoin has created a new channel for accessing US dollar liquidity, particularly in emerging markets and developing economies. The BIS warned that policymakers in emerging markets may need to rethink their strategies as, quote, dollarization is hard to reverse once established, end quote. The latest findings build on the global institution's broader skepticism towards stablecoin. In June of 2026, the BIS reiterated in its annual report that stablecoins fall short of money in singleness, elasticity, interoperability, and integrity, which it says are the foundational properties that any monetary system must keep. Meanwhile, stablecoins are finding growing usage in both emerging and established economies, as regulators in the US, EU, Japan, and other regions are establishing dedicated frameworks to bring stablecoin into the regulated financial system. The total USD stablecoin supply reached $292.6 billion as of Tuesday. That's up from $253 billion a year ago, according to the block's data dashboard. That's the end of the article. I got something highlighted. Let's reread this. According to the report, the growing adoption of stablecoins has created a new channel for accessing US dollar liquidity, particularly in emerging markets and developing economies. And this quote right here, the BIS warned, dollarization is hard to reverse once established. So it dawns on me that the BIS, like the World Bank, even though a lot of these are United States established, or at least, have these things like the BIS and IMF and World Bank are heavily influenced by the United States. And I think in the case of the World Bank and the International Monetary Fund, we were key in creating those, but we're not technically in charge of them, although we clearly influenced the outcome. However, on the backside of all this, it is starting to appear that at least the BIS has been a gatekeeper on just how much dollarization occurs around the world, which may very well be the only reason we have a foreign exchange market in modern times. Because it's very likely that about 25 years after the establishment of the petrodollar and our great friendship with Saudi Arabia, and I won't get into the whole petrodollar thing, but essentially, if you're using a dollar, you're kind of using the petrodollar. It's amazing that even 25 years after the establishment of the petrodollar, that all other fiat currencies, except for major countries like Russia, China, India, it's amazing that they didn't completely collapse then. Like literally before the turn of the century, didn't collapse fully into the dollar. It seems to me that IMF, World Bank, BIS, and other institutions were gatekeeping that because of this one quote. Dollarization is hard to reverse once established. That sounds to me like the BIS is saying we cannot let the dollar take hold. We cannot do it. It sounds like they're just as scared of the dollar, but it sounds to me like they're scared of the United States dollar, but they're saying that no, it's a stable coin issue and we've got to fix that. It's gatekeeping on the US dollar, essentially taking over the world. This is part of the whole dollar milkshake theory, where every fiat currency collapses into the dollar. And eventually the dollar ends up being backed by, could be backed by something like Bitcoin, or it's possible that it doesn't ever get backed by anything again, because it sure as shit isn't right now. It's backed by the US military, and that is another way of saying the full faith of the United States government. If it's not backed, the dollar will fail. If it is backed, then the United States ends up basically being able to walk over the face of the planet. What would it be backed by? Some people will say gold, that gold's going to come back. I don't think so. It makes more sense for it to be backed by Bitcoin. Will that happen? I don't know. We've seen stupid basically breed itself into retarded children walking around all over the place, and some are named Saul, Some are named ADA. Some are named, I don't know, whatever shitcoin you can come up with. All the retards are walking around out there. So it's not a foregone conclusion that the dollar would end up being backed by Bitcoin. Let's pull it back all the way to all I'm really saying here is that it's very evident that these institutions have been responsible for not allowing foreign currencies to completely collapse into the United States dollar. I find that fascinating. Let's run the numbers. CNBC, bombing the Middle East. I can tell because Brent North Sea is up 3 points to $93.75. West Texas Intermediate is up almost 3 points to 86.76. Natural gas is also in the green by 2 points to $2.92 per thousand cubic feet. Gasoline up 0.4% to $3.42 a gallon. And Merbon crude is up just over 4 points, knocking on $90 a barrel. And metals are mostly up except for copper, which is down 2/3 of a point. But palladium is up 2 points. Gold is up 2 points to $4,161.08. Platinum is up 1.25. Silver knocking it over the fence, 2.5 points to the upside, creeping over $60.50 an ounce. Ag is fully mixed today. Biggest loser is chocolate, 5.25 to the downside. Biggest winner is wheat, 4 points to the upside. Live cattle down 1.5. Lean hogs up 1/4. Feeder cattle down 2.1%. S&P is barely moving, 0.09% in the green. NASDAQ is down the same, but in the red. Dow is up 1/4, and the S&P Mini is also up 1/4. Bitcoin struggling. Well, not struggling. We've actually had a pretty good run over the last couple of weeks. We were tapping on $67,000 last night, but we are now back down to $65,980. That is a $1.32 trillion market cap. We can only purchase 15.9 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,059,610 and 1/2 of. Average fees per block are normal. There's 45 blocks carrying 78,000 unconfirmed transactions waiting to clear at high priority rates of 1 sat per VByte. Low priorities will get you in at 0.4. We have dropped below 879 exahashes per second is the hash rate protecting the Bitcoin network. I remain unconcerned. From 24/7 Casino, yesterday's episode of Bitcoin and INPC with a row of sticks, 1,111 sats. He says, thanks. Nope, thank you. Nick Dose with 246 says, cheers. Nostr Gang with 101 sats says, cunty McCuntface. And BTC on board with 100 sats says, my guess is Jack left because they didn't want to pay enough for Strike. I don't know. I mean, that's on the table, definitely, but I don't know. There's a separate issue going on with Jack Mallers as he resigned from 21 Capital yesterday. And like I told you yesterday, however, his compensation package was not mentioned yesterday because nobody knew what it was until later on yesterday. The man was CEO of 21 Capital for just about 1 year, and he's walking away with $140 million. Now, there's a lot of people that are very upset about this, and rightly so, although are you upset about it for the right reasons? Let me illustrate here. And it's not because I like Jack. I still like Jack. I don't think he should be walking away with $140 million for a year's worth of work, but it is what it is. Some people are saying that he's a grifter because he did that. And there's a lot of people that agree with that sentiment. You know, there's a lot of people that are really miffed at Jack, and they're kind of making him out to be some kind of thief. Dude, a CEO's compensation package is not negotiated at the end. It's negotiated at the beginning. Everybody at 21 Capital had reference to how much Jack was going to get paid in general. Right? This isn't a surprise move by Jack saying, knocking on the door of all of his buddies there at 21 Capital saying, hey man, I'm out and I want $140 million and you're going to give it to me. That's not how this works. That was all negotiated up front. That deal was done last year, maybe even a little bit longer than a year ago, because they were in planning stages for probably at least months before they did this shit. But the people that are wetting their diapers about Jack's compensation for a year's worth of work, I understand where you're coming from. I don't think he deserves $140 million either. But I was not part of the negotiation team when Jack took the reins of 21 Capital, and neither were you. And I'm surprised that it took us this long to find out what that compensation package looked like. I'm surprised nobody brought that up earlier. And if they did bring it up, I sure as shit didn't see it. Because I would have said, you mean to tell me that he's fully vested after a year and he could just walk away? Man, that ain't right. But the information for his compensation package was never delivered as far as I know. Now it's been delivered and everybody's freaking out. And I honestly don't think that everybody should be jumping down Jack Maller's throat, because this shit was pre-negotiated. It was a done deal well before he stepped into the role of CEO. If you want to be mad at anything, be mad at the fact that he was able to negotiate the ability to get $140 million, even if he walked away after 1 year. I don't know what else to tell you, but don't wet your Pampers over it. That's the weather report. Welcome to part 2 of the news that you can use. Pavel Durov wants to give 1 billion Telegram users a crypto wallet. So I guess this is going to be round 2. If you don't know what I'm talking about, you probably will after Jose Antonio Lanz tells us more from decrypt.co. Pavel Durov has a big promise to keep before summer ends. Telegram's founder announced on Tuesday that the messaging app, think WhatsApp, but a lot larger with over 1 billion monthly active users, will roll out a native non-custodial cryptocurrency wallet across every version of the app, offering instant zero-fee crypto transactions to all of them. The crypto wallet is being built to support Telegram's native crypto, Gram, formerly known as Toncoin. Do you remember this? A non-custodial wallet means users hold the keys to their own funds. Think of it like carrying cash instead of using a bank account. Nobody can freeze it, seize it, or block a transaction without your permission. Yeah, we'll see. The existing wallet bought inside Telegram, @wallet, which already has 150 million registered users, runs partly in custodial mode, meaning a company holds your keys on your behalf. Durov's brand new wallet would change that. There's a key difference between what Durov announced and what Telegram already has. The existing @wallet is a bot built and operated by the Open platform, which is a separate company, not Telegram itself. The new wallet would be native to the app, meaning baked into every version of Telegram rather than something users have to find and activate. The @wallet bot also defaults to custodial mode unless you deliberately switch it to self-custody. The new wallet would be non-custodial from the get-go. Several specifics are still unannounced. Whether the new wallet replaces or coexists with @wallet, which assists or rather which assets it will support beyond Gram, and how key management will work at scale for people who have never touched crypto before. Well, Durov called it the largest rollout of a non-custodial crypto wallet in human history. The math actually holds up, at least in theory. MetaMask, the most widely used self-custody wallet in crypto, counts tens of millions of users. Nothing in the crypto space has ever launched with a billion user base on day one. Gram, the native token of the Open Network, the blockchain powering Telegram's ecosystem, jumped 7% on the announcement, climbing back above $1.52 at a $4.18 billion market cap from lows near $1.36 the day before. That partially offset the punishing 25% slide the coin posted through most of July, though it still closed the day well short of recovery. Well, to understand why it all matters, you need the backstory. Telegram created the original network all the way back in 2018, raising $1.7 billion from investors for a token it planned to call Gram. Then, the Securities and Exchange Commission sued, arguing that those tokens were indeed unregistered securities. Telegram settled in 2020. It returned $1.2 billion to investors, paid an $18.5 million civil penalty, and walked away from the project. Community developers kept the chain alive as Toncoin for years, until Durov retook the reins in 2026. In June, the rebrand from Toncoin to Gram went live following an 81% community vote, restoring the name Durov originally had in mind back in 2018. Today's wallet announcement is the next step in what he called Make Ton Great Again. A built-in wallet means the average user may send crypto in the same way they send a text message. If you want to buy the news, you may want to look at the bigger picture and be prepared to hodl your tokens for a while. Oh, for fuck's sake. No, don't buy Gram, please. But to finish off, Gram's 200-day exponential moving average sits well above the current price. The all-time high of $8.25 was set in June of 2024 during Telegram's tap-to-earn gaming craze. The more immediate milestone, the $2.89 peak from May 2026, when Telegram first announced its takeover of the network, would require an 88% rally from today's price. Okay, well, it's all bullshit. I mean, Gram, the token itself, which was Toncoin and now I guess is being renamed Gram, that's none of that is actually important. What is important is that Pavel Durov has announced a non-custodial wallet that every user is going to get, regardless of whether they want it or not, as part of their user profile in Telegram. That's the important part. He's not lying. To launch a crypto wallet, chances are good it will probably have some kind of ability to hold Bitcoin, and will probably, if he's really, really smart, have some kind of Lightning Network compatibility or capability inside of it. That probably won't happen on day one. But Pavel, he's not entirely against Bitcoin. He hasn't really said, oh, well, Bitcoin is a shit coin, use my Toncoin. He just said a long time ago, use Ton, and we all laughed, and SEC stepped in and said, no, hold your horses, and everything kind of went south. And now it's coming up again. Why again? Well, because the Genius Act has given some amount of regulatory clarity, and clarity, if it were to pass, would probably clarify the other end of that which is still murky as far as regulators and investors and developers and as far as those guys are concerned. It's noteworthy because at one point or another, I get the feeling that Pavel Durov is going to add Bitcoin to that wallet. Does that mean that we should be jumping up and down with joy? No, because it really depends on whether or not the users actually use it. Just because you give 1 billion people access to a crypto wallet that may or may not have the ability to spend, buy, and trade Bitcoin, or not trade, but, send it. doesn't mean that all of those billion people are going to immediately cotton to it and start using it. This is still, no matter who does what in this space, it still boils down to, how do we get people from using fiat currency? Or how do we get people to understand that the fiat currency that they're presently using is not in their best interest? That's the problem. It's not who builds a wallet or what platform that wallet goes onto. It really is, and has always and will always be, it's going to boil down to the user. Speaking of users, some of them might have to forfeit some money. The United States seeks forfeiture of $25 million in crypto tied to romance and investment scams. Ezra Reguera at Cointelegraph. The DOJ, Department of Justice, has filed 5 civil forfeiture complaints seeking more than $25 million in crypto allegedly tied to international investment, romance, and recovery scams targeting victims in Canada and the U.S. On Tuesday, the U.S. Attorney's Office for the District of Columbia and the United States Secret Service's Washington field office said that the assets were recovered through separate investigations by the Cyber Fraud Task Force. Investigators identified several laundering networks and confirmed thousands of victims worldwide who were misled into believing they were making legitimate digital asset investments. I can't believe people still fall for this. The largest complaint seeks $12.1 million linked to romance schemes that defrauded more than 200 victims, with proceeds routed through intermediary addresses and commingled with other victims' funds. Another seeks $10.4 million traced to more than 270 suspected victim transactions, while 3 smaller cases involve fake investment accounts and a secondary scam offering to recover previously stolen funds. So you got scammed, we got another scam for you to follow up. It's like setting off a bomb and waiting to set off the real bomb when the ambulances and fire trucks arrive, so that you can do some real serious damage, right? For fuck's sake, it's all bullshit. That's all we really need to know out of this, is that the DOJ is going after 25 million in stolen crypto. But what I find interesting is that $12.1 million came out of 200 victims. So what does that mean? $12.1 million. I'm putting it into a calculator, divided by 200 people, means that the average person was taken for $60,000. Actually, $60,500. That's a lot of money. I mean, these are highly effective scam situations. Now, it's an average number. I don't know if all 200, doubtful all 200 victims got scammed for $60,000. But at least, maybe the 5 got scammed for a whole bunch more than $60,000. But still, $12.1 million, and there's only 200 victims involved. This is a very highly effective situation. Make sure that your friends and family are aware that there is no such thing as a legitimate investment proposal that comes over your DMs. Okay? Make sure that they know that, because it looks to me like there's a lot of people with a lot of money that still don't understand how this shit works. Okay, on to AI. OpenAI says AI models escaped containment to hack Hugging Face. Felix out of Cointelegraph. OpenAI disclosed on Tuesday that a combination of its AI models, including GPT 5.6 Sol and a more capable yet unreleased model, escaped its testing environment and hacked AI startup Hugging Face last week to cheat on a test meant to measure their capabilities. In a blog post, OpenAI said the evaluation was designed to operate in a highly isolated environment with restricted network access. The models, however, found a way to gain internet access through a 0-day vulnerability in an internally hosted third-party software. Quote, after gaining internet access, the models inferred that Hugging Face potentially hosted models, datasets, and solutions for exploit Jim, it said. Quote, knowing this, the model searched for and successfully found ways to gain access to secret information that it could use to cheat on the evaluation, end quote. As AI models grow more capable, questions begin to emerge over whether their deployment and access should be more tightly controlled, especially when systems designed for controlled testing are able to find ways to bypass safeguards. Hugging Face is a platform for hosting AI models and datasets. On Friday, it disclosed that its internal datasets and service credentials had been compromised in a hack, which it attributed to an autonomous AI agent system. Hugging Face said it had fixed the vulnerability that was used during the cyber attack. Meanwhile, OpenAI on Tuesday said the models that escaped the testing environment were all tuned with reduced cyber refusals, meaning fewer cybersecurity guardrails. Quote, we consider this incident to be an unprecedented cyber incident involving state-of-the-art cyber capabilities and are responding accordingly, end quote. On Monday, OpenAI said it paused internal deployment of a long horizon AI model after finding it was repeatedly trying to work around constraints. It warned that AI that is trained for long-term, or rather long-running tasks has a higher chance of taking unwanted actions. Quote, models that can work autonomously for long periods of time can take on difficult, open-ended problems, but the same persistence that makes them useful also gives them more opportunities to take unwanted actions and to do so in ways that evaluations intended for shorter-term horizon models may miss. That's the end of the article. If you were wondering about this whole OpenAI and Hugging Face stuff that's going on being talked about on social media, nostr, X, etc., that's what this is. So OpenAI's, they put a couple of their children in their playpen, and as children are wont to do, they got out and started reaching inside the cookie jar and getting on counters and doing all the crazy shit that scares parents to death. It's not going to get any better. In fact, I suspect that this shit is going to get a lot worse very, very quickly. But we're not done with AI yet. Franklin Templeton calls agentic AI the next killer use case for blockchain. Zoltan Vardai, Cointelegraph, artificial intelligence agents are the next killer use case for blockchain and cryptocurrency, according to investment management giant Franklin Templeton's head of digital assets and innovation. Sandy Cowell said in an X post on Wednesday that the AI agent economy will grow demand for blockchain protocols hosting machine-to-machine micropayments as legacy card networks are unsuitable for agentic payments due to high fees and settlement times. Quote, to capture the AI growth opportunity today, most investors buy shares of AI-aligned companies and related verticals. But will the same playbook work for agentic AI? Call said in the introduction to his more than 1,800-word post. He said blockchain networks such as Shitcoin 1, Shitcoin 2, and Shitcoin 3 are more suited for the agentic economy as they settle transactions in seconds, which is faster than the 1 to 3 business day settlement time of the Visa network. In a joint report published last Wednesday, payment giant Visa and investment thesis platform Artemis argued that traditional cards built for low-frequency human commerce are insufficient for AI agents, which need infrastructure with near-zero fees and faster settlement to make agentic micropayments commercially viable. Visa's crypto division and Stripe-backed Tempo both launched AI tools in March. Visa's allows AI agents to make same-day payments. Some machine payment protocols are boasting signs of adoption. The X402 payment protocol developed by Coinbase processed $15 million in adjusted volume across 109 million adjusted transactions since it was launched in May of 2025, according to Visa and Artemis's joint report. So that's the end of that article. And that's the end of today's episode of Bitcoin. And I guess I should say a couple of things about this agentic thing. I say this so many times, and I'm going to say it again. The shitcoins will always be with you, and this isn't helping. This whole AI agentic payment system isn't helping. Why? Because it's going to give brand new fuel to the scam fire that are shitcoins. And I guarantee what you're going to start seeing, if you haven't already seen it, I've seen at least one instance of it, is people either building a brand new quote unquote blockchain specifically for agentic AI agents and all that kind of shit, or agentic AI, or a complete retooling of existing shitcoin chains to do the exact same thing. It's sad, but I mean, yes, there are some chains like the BNB chain, or even Solana, I'll give it to them. I'll say their name. They do agentic AI stuff, and without having to retool it, they exist. But be that as it may, you are going to see brand new chains come up. And there's going to be investment theses. They're going to pitch to VCs. They're going to do all the things that we went through in the age of shitcoinery, and we get to see it happen again. And I'm not looking forward to it, because every single time this shit happens, there's nothing but grift and graft that comes along for the ride. So just be aware. And if you want to protect yourself, buy Bitcoin, hold Bitcoin, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.